Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, August the 19th, the year 2019. Let's talk trading. Euro, AUD, day 11. Action follows belief. I guess I'm going to combine some of the trading philosophy with the trading techniques being used on EUR, AUD. First, let me get to a couple of questions. A trader asked if they needed my indicators to do these methods, and the answer is no, you don't. You can plot the daily open, and you can plot horizontal lines 5 to 10 pips away from the daily open. You can plot the previous day's high. You can plot the previous day's low and the previous day's candle top and bottom, and those would give you the wick zones. The daily open will give you the buy zone. Then, if you want, you can plot the current daily high and current daily low and plot horizontal lines 20 pips away. Problem is, though, every time price makes a new daily high or new daily low, you got to move the lines, and that's the rat zone. So you don't need my indicators, but that's kind of like saying you don't need a lighter. You could rub two sticks together, but the choice is yours. See, the one thing is you might need to know how to rub two sticks together sometime, but in trading, I'm not sure that really applies, but in life it does. And I think that was the main question that I got. People wondering if they have to have my indicators. Now, thing about action follows belief. I heard something. I heard that statement, and it kind of hit me. It's like they said that all human action follows belief. And so you hear something like that, you kind of have to challenge it. Is it true all the time? Is it true most of the time, some of the time? If it's true maybe only once or twice, or was it never true at all? In other words, is it false? I think if you really ponder that statement, it might lead you to the conclusion that, yes, if you take a look at your action, you have a belief, and that's why you're doing that action. If you believe eating well, good food, whole food, raw food, whatever kind of food is going to lead you to be healthier, well, that's why you do it. If you believe going to the gym is going to make you healthier, that's why you do it. So the actions you do come from a belief. So when it comes to trading, you have a belief that you can be successful at trading. Other people are, why not you? And when you click the mouse to enter a trade, you have a belief that that trade is going to go a certain way. So if you buy, you believe price is going to go up. And if you sell short, you believe price is going to go down. And sometimes you're right, and sometimes you're wrong. And that's a segue, right? Because if you have your risk and money management in place, it's okay for you to take a loss here and there, because you're going to only risk that amount that you're willing to lose per trade on each and every trade. You're going to have your position size and stop loss placed accordingly. And so this, having your risk management in place, should give you the confidence to click the mouse. So whenever you believe price is going to go a certain way, you can enter that trade knowing that the worst thing that can happen, barring unforeseen circumstances, is the worst is that you'll lose the amount you're willing to lose. So maybe on $1,000 account, you're willing to lose $10, basically 1% of the account. That's just an idea. Maybe you're only willing to lose $5. Maybe you don't want to lose more than $1. That's up to you. So, looking at the charts, for those just tuning in, the weekly opening gap, all those gaps filled. Price has left the lower wick zone of the previous week's candle and has gone up, heading towards, I believe that's the, I forget what that is now. Maybe I need to put both on. So I don't remember if that is the pivot. I think I was showing the pivot on here. No, that's the previous candle's midpoint. Okay, crashed right there. So price is heading towards that midpoint. Remember, price opened below, and so it could always head the other way. Okay, year, month, week, and day are up. So once again, you don't have to have my indicators. You could look at what the yearly high is, place that horizontal line, put the yearly open there, put the yearly low there. But once again, then if you change pairs, and let's just hit that Euro NZD, you can see here that the indicator changes. But if you were to place those yourself, then you'd have to move those lines or have a separate chart. Okay, I believe yesterday when we made the video, price was around here somewhere. Let's see. That was about 8 hours ago. 1, 2, 3, 4, 5, 6. Yeah, price was somewhere around here, I believe. But you can see price dipped back into these opening ranges and then moved out. Oh, wait, this is, oh, this is days. Let me switch over to the hour chart, and so we can see what happened. So you can see here, price dipped back into the opening range for the year, and then rocketed back out again. So taking those range break trades once again proved to be profitable. And let me, looking at an hour chart, you can now see the action there. Switch that back over to daily. If you wonder why, see, there's not much room here. I could put the candle color indicator, but this isn't a trading screen. This is more for just observation of where price is. And that's something you might consider. I remember I did a video years ago. Do you use the same chart for exit as you did for entry? Some people say yes, some people say no. But I'd be curious. Let me know in the comments whether or not you use the same chart. Oh, let me make a quick comment. Once again, we're above the opens from the last 12 months. Oh, and I believe FOMC day is coming up Wednesday this week, so might have some good price action. And here we are. The opening day ranges. See here, we touched the high of the yearly opening day and moved to the north. We got close to that inside bar range, and push back 33 pips. Might be able to see it just a little bit better. It looks like we got close to the previous day's high, but not quite. And as far as range, pretty slow day, only 3 over 100. 73 pips on the Euro Aussie. You can see we've had a pullback off of that daily H1 highest open. And you can see here on the H1 lowest open, you got, after putting it at the open, you had 1, 2, 3 opportunities to get long and take advantage of that move. Once again, using your stop loss gives you the confidence to take those highest open, lowest open, or 1, 2, 3 trades. Because see here, this was a holo and a 1, 2, 3. Previous candle made a daily high. Next candle failed to break that high, so you go short. Tested it, failed to break, you go short, and it would have paid off nicely. And that happens every day. But remember, traders, these videos are for educational purposes only. Your results may differ from mine. And trading is extremely risky. You can lose your money. So seek financial guidance from an accredited professional. Okay, we already saw that the pivot was above the open and got taken out. And here, price rocketed away from that pivot. Rat zone, red rats, there you go. Green candle closes, red candle closes there. You have a break of that candle's low, rat reversal trade, and it paid off. There's that weekly pivot, looking about, let's see, 22 and 30, a little over 50 pips away. Came close, but then it's pulled back now. It's heading back up. As you can see, that was previous day's pivot right here. Actually, the other one I showed you before, sorry, this was the weekly pivot. This is the previous day's pivot that wasn't taken out. So once the price gets taken out, these lines get taken off the chart. Once again, the indicator does that. You don't need an indicator, but that would require a lot of work on your part. So, the indicator is just a tool to help you see what's going on. Oh, and somebody wanted this indicator here. They said they wanted the TROPA simple. No, this is the template name. I just named my templates and put them here on the chart. So sometimes people want a template or something. So, well, which one is it? Or send me a chart so I know which one they're talking about. And the indicator that plots the horizontal line is the sweet spots gold indicator that I modified. So once again, price action. You can see here price reversing off of the daily highs and lows and not staying within any two lines from when it opens. Usually it will exit. And the wick zone yesterday, price was down here, and I said price will probably exit the wick zone, and it did. Entered this one and exited, and you can see how many times it's entered and exited the wick zone. Why is it doing that? As you can see, I got a few nice trades off of there. Tick chart not really doing much, and I'm almost out of time. So, fellow traders, remember, it's not what you trade, it's how you trade it. So go join